Okay, Assalamualaikum, and we are going to do this question to apply the recognition and classification of building either as an IP or a PPE, right? So you have this question which is from July 2024. Before we start, let us look at part A, even though our focus is part B. So you have Caterina Hotel, which is the hotel owned by few hotels in Malaysia. So these are the hotel, and the hotel includes 10-story hotel building in Kuantan, Pahang. And the hotel offer normal hotel services to the guests, such as buffet breakfast, housekeeping. So these are example of ancillary service and also dry cleaning service. So you are informed that management occupies only one of the floor in the same hotel building. So the management that occupies one floor of the building out of the 10-story, that is the owner occupied portion, which means that the remaining 9-story is the portion that was used as hotel. So you asked to state the classification of the hotel in accordance with Mfrs 140. So you can see that the hotel provide services which is you can see here buffet breakfast, housekeeping, laundry, and dry cleaning. So in this case, the building looks like it is an item of owner occupied property, because not only that one floor is occupied by the management, but the remaining floor, that was ninth floor, are all used to offer services, which is an owner occupied property. So the whole building here shall be recognized as owner occupied property. The reason is because you can see that the ancillary services provided here are all very significant. So let us look at the answer now. So if you go to the answer part, right, you can see that the whole hotel should be classified as property, plant and equipment under MFRS 116 rather than IP. The reason is because you can put here because the ancillary services provided are significant. So if the ancillary services provided are significant, the whole building should be classified as PPE. However, if the ancillary services provided are insignificant, the whole building, even though they provide ancillary service, but the ancillary service is not significant, the whole building should be classified as an item of IP under MFRS 140. But this one is an item of PPE because they are owner occupied property, should be classified as property, plant and equipment, because this is an owner occupied property. Okay, that was for the first part. Let us look at the second part. Okay, second part is part B. You have Nexus One Berhad, this company, and you can see that there are two types of property held by Nexus. So I will just highlight on the first one. The first one is the 12-story office building. 12-story office building. We do not read yet whether it was held as office building or maybe partly used also for rental. We need to read that. The second one is the land. So you have here land. So the land that was also held by Nexus. So what I will do is I will start doing A first, then I will proceed with B. And for your information, you are informed one important statement here, where the company adopts fair value model for the measurement of investment property. And if land is measured using fair value model, the building also must be measured using fair value model. So under fair value model, there is no depreciation, and the investment property will be remeasured to the fair value at each reporting date, right? Or when it is deemed necessary. So you look at the first one, you are asked to explain whether the 12-story building, which refers to the one in the first paragraph, whether the 12-story building, can it be classified as IP? So we have to read the question first before we can answer that. So you are informed the date of acquisition here is on 1st of January 2019. So you have the date of purchase for that, which is 1st of January 19. So on that date, you can see that you are informed the initial cost was 2 million. So 2 million is this one. This is the initial cost. So on that date, you need to check whether it is an IP or not. So to read that is that to move on to the third sentence, the company moved 55 of its employees from its old headquarters to occupy 6 floors. So they are all together. Um, how many floors are there? They are all together 12 story, and you are informed that one of the story were you are informed that 6 floors. So I'm going to draw here. So you have here altogether 12 story. So I put here 12 story. So you have 12 out of 12, which is an office building. Out of this, 6 out of 12, 6 out of 12 is the one that held for operation and admin activities. You can see here for operation and admin activities. For operation and admin activities means this is an owner occupied property. So this one is owner occupied property, OOP, because that was held for admin. So how many floors? 6 floors. And then if you read the remaining floors means the one referring to the remaining 6 floor. You are informed it was being let out to the tenant. So meaning that that is being rented out. So rented out means 6 out of 12 is going to be held as for the purpose of rental. So that rental means it looks like it is an IP. So however, you need to read further what was given. So if the floors can be sold separately, so you can account for the portion that are being rented as IP, and you can also account for the portion that was occupied by the admin for the admin activities as PPE. So this is one important sentence given here. I put in red. You're informed each floor of the building can be sold separately. So here you can see that each floor can be sold separately. So you can put here. So therefore you check first that what was the property with mixed use. Property with mixed use here is actually the owner occupied property and rented property. So that is considered as property with dual or mixed use. Mixed use. All right. And thus, the next one is that each floor of the building can be sold separately. So each floor can be sold separately. So under MFRS 11140, each floor can be sold separately. So the first situation is that it is a property with mixed use. Second one is that each floor can be sold separately. Because of these two situations, where you have property with mixed use, number one, which is for admin and for rental. Number two, you have each floor can be sold separately. Therefore, you can make conclusion that the floors, the floor means referring to each floor, the floors can be accounted can be accounted for separately. So what are you going to write? You are going to inform that the 6 out of 12 that was held for admin is going to be accounted under PPE, and 6 over 12 held for rental will be accounted for as IP. So it will be accounted for separately. The reason is because the floors can be sold separately, which is the reason in number 2. So number 3 is your conclusion. So you can make judgment or your conclusion. So let's look into that in our answer for the first one, because you are asked to explain the accounting treatment for the 12-story building. So let's look at that. So the first one you can see here, you can see that I start with the sentence, this is a property with dual use. So I start by telling that this is a property with dual use, and I give the reason why it was a dual use. The dual use here refers to 50% of the office building that was used for rental, which refers to the sixth floor, remaining sixth floor, right? And another, I'm going to use a different color. Another 50% is an owner-occupied property because it was used for operation and admin purpose. So you are telling that this is property with dual use. Now you need to move on to the second point, which is since each floor can be sold separately, yeah, that was the point, then each floor can be classified or accounted for separately. So meaning to say that in other words, classified and accounted for separately. So you can just add here shall be classified and accounted for separately. Then go and explain what do you mean by that. So the part that has been rented out, the part that was being rented out, which is the one that I highlight in yellow just now. That was the part that was rented out, which is 1 million. Why 1 million? The whole 12 story, the total is 2 million. So 50% is 6 out of 12, so 1 million. While the part that is owner occupied, or this one is owner or employee occupied, shall be classified as PPE at 1 million. How do you get 1 million? Because 50% here refers to 6 over 12, and that was from the 2 million. And this will be shown in the soft P. So that was for 4 marks. So that was to answer the part which is how to account for the or the properties for dual purpose. Okay. Now we move on to the next one, which is the second part of the question. Second part of the question is about a piece of land. Okay. The piece of land, which I just put green in color. And the land was acquired at a cost of 40,000. And the company has not determined as what to do with the land, and it would use the land. They have not yet decided whether to use the land either as owner occupied property or for short-term sale. So it has not yet determined the purpose of which the land would be used. So therefore, under MFRS 140, if you have not yet determined what is the purpose of holding a property, either land or building, it will be accounted or classified as IP. So this is an IP. On top of 40,000 that you have there, you also have some legal costs. You have some legal costs. The legal cost here, we are referring to the legal cost given, which is, and transfer tax, which is 4,000 and 2,000 respectively. So there was this land. You need to go and find out what is the initial cost. So this is the purchase price at cost, and these two are the directly attributable costs. And then the next sentence, which is I'm going to use pink, is information on subsequent measurement, where you are informed the fair value of the land for the year ended 31st December 2020 and 2021 were 52,000 and 49,000 respectively. So therefore, this part here is on initial recognition and measurement. You need to find out how much is the cost and that the land is an item of IP. Next one is the subsequent measurement, which is on 31st of December 2020 and 2021. So if you look at the requirement B here, you are asked to discuss the accounting treatment. Discuss the accounting treatment for the measurement of land, which is confirmed to be an IP for 2 years, 31st December 2020 and 31st of December 2021. Okay. Right. So if you look at the information given here, there are two information. Number one is on the fair value of land and also the information on costs. So go and find out how much is the cost. Now step one, find out how much is the cost. So you can see here, you need to go and explain what happened on 31st for the year ended 31st of December 2020. So for the year ended 31st December 2020, you need to go and explain initial recognition, yeah, and then initial measurement, and then also you need to go and explain subsequent measurement. For subsequent measurement, you need to go and explain what are the fair value gain or fair value loss that will be shown in SOPL. You need to explain that. And you also need to go and explain what is the carrying amount in your SOFP for 2020 there. So this one, that was for the first year. For the second year, what you will do is you are going to explain only on subsequent measurement. So you're going to explain for the second year, I put here, on 31st December 2021, you are going to explain only on subsequent measurement for the land. You're not going to explain any more on initial recognition or initial measurement because there were no new purchase whatsoever. So there are none. So you're going to explain this. Right. So if you check the information given, there are fair value given for 2 years. So the first one here, you can see on 31st of December 2020. This one is fair value 1. So this fair value 1 will be compared with the fair value on, will be compared with the cost, which is the carrying amount. The next one is fair value 2. Fair value 2 is on the second year. So the first thing to do is to find out what is the cost. So find the cost, initial cost. So your initial cost should be, take the cost itself, cost, which is 40 million. And then you have the legal costs, which is 4 million. And then you have the next one, which is transfer tax. Yeah. And that transfer tax was 2 million. So therefore, your total initial cost will be 46,000, sorry, not million, 46,000. So what you're going to do is you're going to compare in the first year this figure, which is this one, yeah, the figure here, with 52,000 to see whether there is a fair value gain or loss. And in the second year, you are going to compare the fair value 2 with fair value 1. Because in second year, fair value 2, you will have to compare with the carrying amount, and the carrying amount will be the previous fair value. So let us look at that answer here. Okay. So on 1st January 2020, so we start with the initial recognition date. Initial recognition date. On 1st of January 2020, you need to go and explain how do you classify the land. So the land was classified as IP. So you need to mention it was an IP. Give the reason, because it was held for undetermined future use. So that was the first sentence, which is to do the initial recognition. So initial recognition, I put IR here. Okay, that was IR, initial recognition. The second sentence here is on initial measurement. So you should show the workings, which is 46,000. And this one that is where it shall be initially measured at cost, and that cost was 46,000. So this one is IM. IM is initial measurement. Initial measurement, all right. Next, we will move on to the first subsequent measurement. First subsequent measurement is on 31st of December 2020. And on 31st of December 2020, for the first year, the difference, you have to go and compare the carrying value. The carrying value here is the figure 46,000, which is this figure here, which is the previous cost, will be compared with fair value 1. Fair value 1 here is the one in blue here. We will compare. So if you compare, you can see that fair value exceed the carrying value. So the difference, which is 6,000, will be recognized as gain. Gain here means recognized as fair value gain in the statement of profit or loss. And therefore, the amount 52,000 is going to be shown in the SOFP. And under fair value model, the land is not depreciated. So you need to mention the sentence land is not depreciated, and also how much is the carrying amount in the SOFP. Right. So that was for the first year. And now we go to the second year. For the second year, initial measurement and initial recognition is not needed. You just need to explain how is the subsequent measurement. SM, I put here SM because that denotes subsequent measurement. So subsequent measurement, so I put red to highlight. And you are going to repeat again the same thing for the second year. So I have already separated the 31st December 2020 and 31st December 2021. So for 2021, you are going to repeat what you have, but you are now going to compare for the year ended 31st December. What are the difference between the carrying value? So the carrying value here 52,000 will be the fair value last year. So the carrying value here, 52, this one, will be the fair value last year, which is this 52. And you are going to compare with the fair value on 31st of December 2021, which is 42. When you compare, you can see that the fair value is less than the carrying value. And this, a difference of 3,000, the difference of 3,000 will be recognized as a fair value loss in the statement of profit or loss. And again, you will repeat, the land is not depreciated and the land is carried at 49,000, which refers to the second fair value, which is fair value 2 as at 31st of December 2021. Right, so that was the case for the first part, the part B there. Okay, that gives you five marks. Okay, I will just stop with this for a while, and I will continue that with another questions after this.